Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 1st, first day of the week, first day of the month, first day of the quarter. We are starting Q2, and we've been seeing a lot of rotation lately in the markets. And today's economic data, it's pushing the narrative against technology. Technology today is suffering a lot, and gold and other kind of asset class are also pushing divergences in the market. And we have to pay attention to that because I think rotation out and outflows of technology are a reality, and we have to really see if this is a continuous selling pressure to the downside or it's just taking profit temporarily. And also small caps, we are going to review that in the charts, but first, as always, today reviewing the economic data. The first economic data that took quite a hit into the market is the ISM manufacturing prices for March. Look at this, 55.8. We were expecting basically 52 point something, same as the previous one, but the prices on the manufacturing side are skyrocketing. This coupled with the fact that the ISM manufacturing PMI came higher also than expected. We were expecting 48, higher than the 47, but look at this, 50.3. So economy is strong, prices are pushing higher. Global manufacturing PMI for the S&P on final, it's still super high. So economy is strong. We know that the US economy doesn't need any help, but we are also battling against the inflation. And this is a battle that looks like we are in a bumpy road, and we might see more issues in the short term when certainly data comes out. We saw that on the PCE prices last week that were corrected to the upside 0.4 to 0.5 on the month-over-month core PCE, and year-over-year from 0.3 to 0.4. So certainly the inflation battle is not over. So we have to still see what is happening with the price action, because as you can see, this is the 15-minute chart, and we were opening with a gap. And sometimes we open with a gap in futures, it's quite bullish. We pushed that gap and we were consolidating in this zone until the London Open. We were leaving behind these two liquidities that never got taken, and also that liquidity it's coming from the first fake out on the all-time highs here that we pushed and rejected heavily on March 21st. So this zone up here, it's super important. This is a zone in between basically 18,626 towards 650. So this zone, it's really protected. And today, if we go to the 1-minute chart, we can see how the market were consolidating way above the gap. And when the London Open, we saw this kind of sell-off, then kind of chopping around, and then the final breakdown pretty heavily towards liquidity and partially filling the gap. So the gap is pretty important in futures. It's not a regular gap as on the stocks. A gap in futures is quite important to see, because it shows you where the imbalances are. And remember that we are coming off this huge imbalance up here in the 30-minute and the 15-minute, and also the 5-minute fair value gap inverse that we left behind. So as always, we open and we skyrocketed trying to grab some more liquidity. Why? Because Google, it's super bullish today, 2.53. Because Nvidia was bullish, but it's now being corrected and in the negative minus 0.60. And Meta, it's also super bullish. Microsoft is also bullish. And what happens when Microsoft, Google, Nvidia, and Meta pushed up? Basically, this is an AI move. Investors are willing to start the quarter betting on more AI hype and more AI FOMO, but we have to certainly take a step back and see what are doing other markets. Apple, it's super bearish. Tesla, as always, being beaten up. Amazon, consumer discretionary, tried to push, but it's just chopping around in the negative. And we have dollar quite bullish, super bullish. Yields, the 2-year yield today is in the green 1.65%, 4.7. 4.7. Remember in my weekly recap last weekend, we talked about this 4.75 and we are almost there. The 10-year, it's 2.82% today. Look at this candle. Look at this candle. We are in the upper range of this consolidation at 4.32. And then at this zone, in the right-hand side, we have the interest rate futures. All of them are positive. So we are expecting higher rates in the near future from June until September. And the September one, it's this CQU, it's 1% higher, 5.84. So today's data really affected the sentiment that the technology and other sectors were waiting for interest rate cuts. And that's what happened up here. We couldn't hold. We started to see weakness. For inverse fair value gap, this is a quite beautiful short on this inverse fair value gap. So starting here, or basically, let me just show you how to take these kind of setups. The close on this line is pretty much done for the shorts. The stop up here at high of day, 30 points. And you can just basically take low of day for a 3.12 risk reward ratio and 94 points with only risking 30. So 3 risk reward ratio, it's pretty damn good. We sold off. We filled the gap. Let's go back to the 15-minute to really see how the price action affected the liquidity. So we filled the entire gap. All this gap was filled. We continue lower. We took this pivot from from Thursday, because Friday was Good Friday. And I was watching this zone down here. I don't think that, I don't know, but be careful with this liquidity down here. I don't think we will be able to hold if we continue like this into the power hour. Certainly, I don't expect the gap to just continue higher. The 200 is here. The 15-minute and the 13-minute charts are certainly quite choppy, and I wouldn't be surprised if we try to sneak higher and then find a lot of selling into the end of the day, into the close. Perhaps grabbing the liquidity down here from this pivot at 18,378 or 380. So certainly the defensive sectors, dollar yields are high, are in the green. Look at small caps. Small caps just are being destroyed, -1% today. All of the banks, look at all the banks, all in the red, 1%, 2%, 3%. Gold, which is certainly a defensive asset when interest rates are really higher, are 0.90. And we have to really see how gold is reacting. There's a lot of volatility here after a lot of spikes. Gold is at huge prices right now, and with the dollar and yields being so high in the green, I think the rotation is certainly toward defensive, and technology is just being driven by a bunch of stocks that are focused on AI, such as Microsoft, Google, Nvidia, Meta. So really tricky start of the week and start of the month. We have to really pay attention to what is happening on higher time frames. On the 1 hour, I don't think we are going to see these high prices at 18,600s. I think this liquidity down here at 18,400 and all that stuff, all this zone is going to be taken. If that happens, then this 1 hour fair value gap is going to get run through, and then we can start a correction move from this huge move on the FOMC. So certainly, I think there's more potential this week to the downside. I'm still bullish. I think we can find demand zones and key levels for bulls to really have some nice buys if you are playing long term. If you are playing intraday, I think you have to be really, really careful, because sometimes look at this price action. There's big swings to the downside, to the upside, to the downside. I mean, there's a lot of risk and volatility in these markets. But if you have certain levels and you know how to manage your risk, there's certainly a lot of possibilities still to play long sides if you are still bullish. So as always, I think we have to really exercise a lot of patience and a lot of discipline, and more than ever, risk management. We are starting the week with a lot of change in sentiment. A lot of key levels are being rejected. We are going through support levels. So be really careful today into the close, because I think we probably might see more downside into the close. So let's see what happens as always. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel, subscribe, follow, support my job, my work, because these videos are for you to take notes. I'm sharing my analysis, my perspective, and my approach to how to trade these markets. I think having a lot of different views and in YouTube and all the people that is trading and have experience is really beneficial for you. So that's why I'm sharing this kind of information. It's just for free. Just support the channel, because I would like to continue doing this. And thank you if you're subscribing. Thank you if you're reading my work and you like my work. And as always, I'm doing these kind of videos every single day for market forecast, market updates, and market recaps. Take it easy. The start of the week and the start of the month, there will be a lot of opportunities. You know that. Don't lose to FOMO. Don't lose to AI, because these kind of moves might happen. Look at this 1 minute big rejection into a low of day and liquidity. This was a nice short that I didn't took for personal reasons. I couldn't just watch the market as I would like. So I'm just being patient, and I'm really careful with the downside that might be happening throughout the week. So be really careful. Stay safe, everyone, and see you tomorrow.